Hello, everyone. Thanks for joining and welcome back. Our guest today is a very good friend, Bart Brands. Bart is a precious metals specialist at Gold Republic and a certified security intelligence professional. Bart, welcome back.
Thanks for having me again, Ivan. It's always a pleasure.
Yeah, it's a huge pleasure having you come down. There's so many exciting things happening in precious metals right now. A lot of people are talking about, what's happening with silver, what's happening with gold, everything geopolitically. First, I wanted to, ask you, what do you think makes gold and silver, such enduring stores of value throughout history, Bart?
Oh, wow, that's an amazing question. And I think it's their proven track record. It's their historic use. It is the reasons why gold and silver are the only real forms of currency or money, I have to say. So, everything that we call money isn't real money. And money has to abide by certain characteristics, and these characteristics can only be found in gold and silver. And so it is the reason why I always say, for example, that gold is the king of money and the money of kings. And of course, silver, with its schizophrenic little brother. I think they are the only two forms of real money. And so that's why they endure. That's why we will always use them. That's why I think that people have an instinctive and intuitive connection to gold and silver. As a precious metals analyst and specialist, I get to talk to a lot of people about gold, and I show them gold. I show them silver. I never met anyone who didn't get enamored with precious metals, who doesn't want to touch gold, who doesn't
Yeah.
want to feel its weight. So they are magical. Both of them are magical, and nobody thinks it's ugly because we are instinctively and intuitively bonded by these beautiful precious metals.
Even central bankers love gold.
It's the only real store of value. Over time, gold and silver are the only true stores of value. You can talk about real estate, you can talk about art, you can talk about whatever you want, classic cars. They are always temporary. Real estate, if you don't keep it up, it will vanish into ruins. Art, exactly the same thing. Classic cars, you have to keep it up, you have to maintain them, but you can just find old buried treasure that was in the ground for thousands of years, and it still looks beautiful as the day it was buried. So, it is gold and silver are magical.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Absolutely. Now, Bart, what are some, common misconceptions people have about buying, selling, or even storing gold and silver?
Oh, that's also a great question. I think, well, it starts with, I think, a lot of people say gold don't pay any dividends or they don't have a fixed interest. And that's true. But if you look at the performance of gold over time, and I'm based in the Netherlands, so I'm not talking about troy ounces in dollars. Let's say we look at the euro kg um, uh, rate of gold. If you had invested in 2000, so that's a quarter century ago, you would have a yearly interest on or value increase of your gold of 10% per year.
Wow.
And that is amazing. And that means that over the past 25 years, the price of gold increased tenfold. So you could buy a kilogram of gold in 2000 for 9,500 euros for 1 kg of gold. That same kg of gold is now roughly 95,000 euros.
Wow.
That is uh, that is something that most people, or a lot of people that maybe have vested interest elsewhere, like to deny. They say, it's a pet rock. Well, it might be a pet rock, and it is beautiful. And I always keep gold on my person, and I touch it a lot, and it feels amazing. So that's, I think, another positive. But to think that holding gold is inferior to, for example, holding the S&P 500
Hmm.
or Bitcoin or real estate. And even though I think there is always room to, in a good diversified portfolio, to also hold these assets, I think it is incredibly important to make sure that there is also some gold and some silver in your highly diversified portfolio. And I have one I think nice stat, and that is the year-to-date interest or year-to-date performance of gold versus the year-to-date performance of, for example, the S&P. Well, S&P
Right.
500, 3.1% starting this year till now. Bitcoin, 13.6% starting this year until now. Gold, measured in dollars per troy ounce, 27%
Wow. Yeah,
interest
that's huge.
or a gain, performance gain. It's there is no it is the best performing asset at this time, this year to date. So I think, you have to hold gold, thinking that it doesn't perform good, or that there is no need to hold it because it is outdated. Tell that to central bankers that have been buying record amounts of gold for the past 4 or 5 years.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Can you explain, Bart, the concept of the gold and silver ratio and what it means to, what it might signal to investors?
Yes, of course. The past couple months, we've seen in euros per kg, we've seen a gold silver ratio of 1 to over 100. So let's say 1 kg of gold will buy you 105 kgs of silver. Not as at this moment, but it was the case for, let's say, 3 months. I I kept beating that same drum, saying, look at this. um, let's see how many times that happened in the past 100 years. It was maybe a dozen times
Wow.
that the gold silver ratio was more than 1 to 100. Of course, during the COVID episode, we saw a ratio of 1 to 124, and that was the highest ratio ever measured.
Wow.
Then let's look at the historic ratio. The historic ratio for the past, let's say, 1500 years was 1 to 15 to 1 to 25. The past 25-year ratio was about 1 in 60. And then the most important stat to talk about when it comes to ratios is how much gold is produced versus how much silver. And that ratio is about 1 in 8, let's say 1 in 9 to be conservative.
Wow.
So for every ounce of gold, 9 ounces of silver are mined. But of those 9 ounces of silver, 4.5 are used in industry, 2 or maybe 3 in amounts so small that they can never be recovered. Not at these rates anyway, or these prices. So before it becomes interesting to recycle milligrams of silver that is used in everything electronic. It is the best conductor of all metals. It is the best reflector of visible light. And it has antimicrobial characteristics, and that makes it very interesting, for example, to put in band-aids or in clothing, but in such small amounts that it is not value, it doesn't have enough value to recover it after the piece of clothing is discarded. So we are using silver in a way that it cannot be recovered, except for, let's say, the prices 10x,
Right.
100x. I'm not sure what it takes, but to urban mine silver, that would mean that the price of silver would have to at least, let's say, 10x. And before we are there, I think everybody should take an opportunity to look at these fundamentals, because they are the fundamentals that I think are super important and also very interesting to get to know, and then make an informed decision to, and the conclusion has to be, I have to invest in silver. Of course, that has to be the conclusion.
Right.
So to invest in silver as well as gold. But and last part about this, my ode to silver, because I love it, is, I call it the schizophrenic little brother of gold for a reason. Is because besides all these productive ways that we can use silver, silver has been money for 4,000 years. We've used it as money. It was in our money up until the 80s.
Right.
So, and I think it will return as money. So whenever the demand at an industrial level might fade, it will be picked up by the investment demand, by people that feel that gold might be overvalued, or that say, I want more ounces for my euros or dollars, and they will invest in gold, as people have done for thousands of years. So yeah, my
Yeah.
ode to silver.
No, absolutely. Now, before you go, Bart, I guess I want to get your take on what's your biggest concern about the markets right now? Is there anything you're keeping your eye on right now that you're saying, this is a problem? Or, yeah, what's your biggest concern?
Well, we've seen, for example, in the United States, that there are, well, first of course, war, but that might be theater. It might be a theater to make sure that everybody saves face in Iran, Israel, and the United States. But I always look at the monetary motivation behind this situation. And the monetary motivation is, we are at the end of a monetary system.
Right.
So they will create wars. They will do whatever they feel is necessary to keep the ball rolling just for a little bit. And I feel, and so this is what I'm projecting for the near future, is that there might be some event. I'm not sure what kind of event, I don't have a crystal ball, but there might be some event where the Trump administration pressures the Fed into dropping interest rates.
Right.
Once they go that route, and I know that there is a conflict going between the White House and the Federal Reserve, because why didn't they drop interest rates yet? And what would have happened if Kamala Harris was president? Then
Right.
interest rates would be down to 2%. It is speculation, but they were already going that way.
Right.
So there is a fight going on between the Fed and the White House administration. And I think the Fed is going to lose that fight, which means interest rates will drop, which means the printing presses might be turned on. I'm projecting, or let me say, I wouldn't be surprised if in the first or maybe latest the second quarter of 2026, we will see a form of quantitative easing either in Europe or in the United States, but most likely in both.
Yeah, absolutely. Now, Bart, it's such a huge pleasure having you come down, speaking to the silver and gold community. I love that you talked about silver as a schizophrenic little brother. But I wanted to give you a little chance to, where can people find you? I'll put the links in the description below. But yeah, where can people find you?
Well, I'm starting to get real active on Instagram, so I would love for people to follow me there. It is in mostly in Dutch, but I also try to do some things in the English language. I'm on Twitter as well, and of course the YouTube channel of Gold Republic and Gold Republic Global are well, we're trying to be as visible as we can.
Absolutely. Everyone watching this, I highly recommend. Please go check out Gold Republic. Please go follow Bart on Instagram. I'll put the links in the description below. And as always, Bart, such a huge pleasure having you come down to speaking to the precious metals community, the investing community. And as the market develops, would really love to have you back on soon.
Thank you, Ivan. It was my pleasure.
Talk to you soon.